We're now going to talk about a pattern called double bottoms and double tops. Firstly, double bottoms. Let's have a look at how a double bottom is formed. A double bottom is formed when a low is hit by the stock and then it retraces upwards and then forms another low, or is in danger of forming another low, so we can actually anticipate double bottoms. Now what happens is that the first low may well form a support level, so as the stock comes back down again towards that first low may act as support and the stock may well rebound off it. This is because buyers and sellers in the market may come to the agreement, effectively, that this is an area of support, and then the buying action starts up more aggressively again and the buyers start bidding up that price at those levels, forcing the price upwards. And as the price starts to rebound once off it, then what can happen is that the cascade of orders comes in and more buyers enter the fray, forcing the price back up. And from there, the stock can either go from strength to strength or otherwise. Let's have a look at an example here. We see here on the left-hand side of the screen that a low was formed in June. The stock went up by quite a lot, almost about $10, and then came back down and hit almost the precise point of the low that it hit before in June, when it goes back there in July. And off it bounces and goes straight back up. Not only that, but it does the same again in October. So that first low in June formed the basis of support not once, but twice. The opposite of a double bottom is, you've guessed it, a double top. A double top happens when a high is formed and the stock then retraces or rebounds off it. And as the stock price creeps up towards it again, that high may well form an area of resistance. If buyers and sellers in the market are aware of this area of resistance, they may well conclude that this area is one where, as the stock approaches it again, the sellers get more aggressive as they start bidding down the stock. And therefore, as the sellers get more aggressive, the buyers run away effectively or aren't as aggressive, and therefore the stock will then rebound off that price. And the more that buyers resist or run away, and the more that sellers are aggressive, then the stock price will go down even further. Let's have a look at it in real life. Here we have a stock that reached its peak in the beginning of December, or at the end of November, reached a high, retraced all the way back down to 44, which is about $10 down, and then reached another high again at the end of February, and guess where that was? Right up there again at the double top area. This stuff is happening all the time in different time frames, and you're going to see later on why it's relevant for us in different time frames and as we trade our flag patterns. Let's have a look now at how this can actually manifest itself as we're trading a flag pattern. I did mention this could happen in different time frames. We could literally be talking just a few days. Have a look at this bull flag here. Here it is on the right hand side. I've just marked it in yellow there. Now, what you can see is that this flag is actually quite steep, and you can see the parallel trend lines I've just drawn in there as well. Now, in order for this stock to be attractive to me, I would want it to break the very highest point of the flag because this is so steep. And in order to do that, it would have to break through in such a way to show that this was not going to form a double top, i.e. the double top would fail. Let's have a look at this next little bit. There we see it again, and we see what's happened. We see that the stock did break through the 19.25 barrier, which is roughly the top of that flag, or the very highest point of the flag, and it broke through and then stormed off to almost $21. But the point is this: I would not have been interested in this stock until it had broken through the very highest point of that flag, and when it did, it broke through and didn't give us an awful lot of stress. It didn't break through cleanly and keep going. It actually broke through once, then it broke through twice, had a little think about it at around $19 for 2 bars, and then off it went upwards. I'll emphasize the point. Where you have a steep flag, there is always that danger of a double top occurring. Therefore, we want to make sure that we are not going to be making ourselves vulnerable to that double top. So I need to see that double top broken. And in this case, it was. It had a little think about it twice, and then it went steaming on upwards. Now, amazingly, we've already gone through the main chart patterns that I want to look at. We are going to be looking at them in more detail, particularly from a trading perspective, but what we've gone through so far is very simple, but there is a bit more to it.